Hey, hello there. I'm Alvin Mabuza, and this is Money Moves, where we make your money move for you. Today we are at the Neil C Cinema, and we are going to find someone to ask us about finance. Stick around. I'm sitting with Dakota. As you know, the economy is tough, things are expensive, inflation is going crazy. What financial questions do you have for us that we could help you with in your finances?
Okay, so I do have a stable income.
Oh, great.
And lately you just have to invest. So I just want to know what types of investments there is. Please. Property, cash, crypto.
Okay, so hopefully we can help you out with that. Good thing for you, I have two great experts in the studio that are going to help you out with the different types of investments. Over to you in the studio.
Hi, and welcome to the Money Moves studio, where we aim to educate, inform, and entertain. This is episode 2, and we are thrilled with the feedback that we've received for episode 1. Please like and subscribe. It really does go a long way. So, Paul, it's been on my mind for several months now, if not years, as everyone keeps on telling me, Ingrid, you need to invest, especially my dad, you need to be an adult and invest. And what is there to invest in, and what options do I have?
Ingrid, good morning. Reporting from the beautiful Cape Town this morning, as always. What are we drinking? It's cold, so we're drinking coffee. No milk, no sugar, black as is, but hopefully the markets are green today. So there are 6 main asset classes. Let's go top to bottom. The first one is called cash. We all understand it. It's money in the bank, moolah, mandalas, or money in your pocket or in your wallet. And cash is simple to understand, whether it's a fixed deposit, a savings account, a check account, a 32-day savings account, whatever, it is called cash as an asset class. The next one is called bonds. Now, once again, that's also a term we always hear and know. A bond is when you actually borrow money from the bank because you want to buy a house. But you can also be the investor in a bond where you give the money and then someone else or an institution borrows it from you and pays you interest. So that's the second one, bonds. The third one, probably the most popular one, is property. People love property, and almal wil huisie by die sê, almal. So we all understand property. You get commercial property, industrial property, residential property. Fact is, it's a roof and 4 walls, and that's property. The fourth one is called commodities. There are different types, so you get metals like gold and silver and platinum and so on. You get energy, oil, natural gas. You also get agriculture commodities like wheat, soya, and so on. But together they all form part of the commodity asset class. Then my favorite, stocks. We all love stocks. Nvidia, Apple, Microsoft, MTN, Sasol, Merafe, Capitec, Naspers, Tungela, Purple Group, need I go on? For the love of stocks. It's not an obsession, I promise. So like they say in Afrikaans, ek beloof. And then the last one is the new kid on the block, which is of course cryptocurrency. So whether it's Bitcoin, Ether, Dogecoin, Shiba Inu, Cardano, whatever you like the most, that they all form part of the cryptocurrency asset class.
So, viewers, I must say, I think Paul is understating his love for stocks, but I actually think that crypto is creeping up on stocks' number 1 position. Anyway, so Paul, thank you so much for indicating and just clarifying the different types of asset classes. But like they always say in any corporate meeting, return on investment. What is the actual return of investment in any of these asset classes?
Yes, the payoff or the ROI, return on investment. Sure, cool. Let's go from the top. So number 1, you get cash, And of course, interest. That's obvious. We all have a savings account or a fixed deposit where you earn interest in your bank account or your bank deposit. The second one, bonds. It's a little bit more complicated, but mainly it's also interest. So once again, you loan money to an institution, they pay you interest on the money. Number three, property. Of course, rental income, the best form of passive income that you can get out there. And also capital gain. So the value of the property goes up over time. Of course, it depends where you actually invested, right? If it was in the Western Cape, Stellenbosch, Cape Town, Franschhoek, one of these places, it would go up in value quite significantly. The rest of the country, not so much in the last 10 odd years. Number four, commodities. There's no making soya, making more soya, or gold, making more gold and paying interest or something. It's just capital gain. So you hope that the commodity that you bought or trade in go up in value over time. The fifth one, stocks, my boy. Two ways. The first one is dividends. So it's companies, and companies make money and they run a business, and sometimes they pay out a portion of the profits to shareholders, and this is called a dividend. So sometimes you receive that, but the main way in which you make money in stocks is also capital gain. So it's just the stocks going up in value over time. And the last one, English cryptocurrency, there are a few different ways to make money, but by far the main one is capital gain. It's super volatile. It goes like this. It's basically down the elevator, up the stairs, down the elevator, up the stairs. But at least looking at the history, which is not very long, 15 odd years, capital gain is massive. So it goes like this, but you pay the volatility price for it.
When you now said that crypto is volatile up and down, I think it's much more like bungee jumping than it is going up the stairs and going down with the elevator. But okay, Paul, so I actually have two questions. So number one, please help me just understand volatility a bit better, because depending on how volatile something is, it would actually nudge me either towards it, or it will actually refrain me from investing in it. Do you have any insights regarding that?
Yeah, so this is actually, Ingrid, this is a good question, and it's a misunderstood concept in investing. So everyone, there's risk and there's return. Let's start with return. Return is simple. We all understand it. Am I making money? Like, show me the cash dollars that I'm making. Everyone gets that. But risk in investment is not, oh my word, they're going to steal my money, I'm going to lose everything. Risk is volatility. How much up and down is this thing going? So for example, money in the bank is very low risk because it doesn't go up and down. Like you get interest on your money and that's that. Whereas cryptocurrency, the risk on cryptocurrency is very high because the volatility is very high. Even stocks, the risk on stocks is much higher than something like a bond or cash because of the volatile nature of the asset class.
Let's say I am feeling a bit risque and I do want to invest. What should I choose? Because it kind of feels like I can just throw the 6 asset classes into a hat and then just pick one. Or is there certain guidelines that I need to keep in mind when I am investing?
Yeah, so there are certain guidelines for you that can help you make the decision as to which one is the best for you. But in a nutshell, you want to invest and I want to invest in the thing that goes up the most. Am I going to make the most amount of money? That's the return aspect. The thing is, the higher the return, the higher the risk you're taking to generate those returns. Case in point, Bitcoin. If you want to make a lot of money, yes, okay, Bitcoin. But in any given week, it can drop by 30%. There's 30% of your capital gone. The risk return spectrum works as follows. You have cash, low return, savings account, 5-6%, depending on the interest rates. Bonds, a little bit of higher risk, higher return. Property, same thing. Then you get commodities, then you get stocks, and then you get cryptocurrency. That's the best return historically, but it goes like seesaw, like you said, bungee jump. So it depends how much risk you are willing to take and who you are as an investor. But typically we work from stocks is the best. It is volatile, yes, but if you keep it for a long time, you're going to make the most amount of money. And then you pair, what the hell just happened? Why is this happening? Can you see it on my screen?
It's when you said stocks.
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 So typically you would use stocks as your basis, and then if you want more risk, you would pair it with cryptocurrency. If you want less risk, you would pair it with bonds or cash and so on.
Paul, you are kind of keeping me hanging because it does seem like there are certain specifications with regards to your personal circumstance that can determine what you should invest in. Am I right to make that deduction? And is there a reason that you're withholding this information from me?
I did tease you a little bit there. I mean, I didn't give you everything because, firstly, I can't give financial advice over a recording like this, and also it really is dependent on your specific financial situation. But we will discuss that in a future episode, and I will leave that there.
And guys, we're leaving you with a cliffhanger. Believe me, I'm also feeling it. Thank you so much for tuning in, and we'll see you next week. Cheers!